Many people are overwhelmed when it comes to tax planning, and rather than trying to cook up a scheme, believe it or not, it's possible to actually reduce the amount of tax which you pay quite legitimately. The secret is, firstly, to minimise your income, and the main method of achieving this is through salary sacrificing part of your salary to superannuation. Secondly, claiming all of your eligible tax deductions. The Australian Taxation Office allows you to claim a tax deduction if you spend money on something which helps you earn an income. A tax deduction reduces the amount of income you have to pay tax on. However, as we all earn an income in different ways, what is allowed as a tax deduction for one person may not be allowed as a tax deduction for another person. For example, if a lawyer buys a hammer, you can't claim it as a tax deduction, but if a builder buys a hammer, you can. Your tax saving as a result of a deduction will vary depending on the marginal tax bracket which you're in. The higher your marginal tax rate, the higher the tax deduction. It's important to note that no one has ever become financially wealthy on tax deductions alone. You've still purchased something. All you've done is purchase something at a discount. To assist with preparing your tax return, it's advisable to keep records of any payments which you've received, any expenses related to the payments which you've received, and any assets which you've disposed of during the financial year, any tax deductible gifts or donations, and also any medical expenses which you've had. As a final word, it's important that you stay on the good side of the Australian Taxation Office and maintain your written records for 5 years after a notice of assessment has been sent to you from the Australian Tax Office. Getting on the wrong side of the tax office is like taking on a Rottweiler with your bare hands. I wouldn't recommend it. If you have any questions, please don't hesitate to contact us.